Hey everyone, this is Will here with Flow Trade Effects. I'm bringing you a new video in the intraweek flow trading system. Today we're going to be talking about trigger charts and entry signals. Now, as you know, we're going to be doing all of our mapping off of the 1 hour time frame. But when it comes down to entering the trade, we're going to be looking to zoom into the 15-minute time frame, and we're going to be looking to place our trades off of these key levels of support and resistance. Now, in this specific example on the chart that we have on the screen right here, we have a up move where price had found some form of resistance, came back down to create a new support level, and then boosted through this resistance level with momentum like we like to see. And then we get finally another resistance level above, in which price comes back down and is now at a key decision taken level, which is the previous resistance now may act as support and will hold price and allow price to continue to bounce off this level and give us our entry signal. And in the event that price continues to break through here, we'll be looking to see how price reacts off of this level here. If we get a bounce or a continuation through that, reversal back to retest that level as some form of resistance, and then we will continue to look for our trading opportunities as they would present themselves in that scenario. But at any rate, we're going to assume price is being held here. We'd zoom into the 15-minute chart to look for our bounce off of this level of previous resistance now acting as support, and that would give us our entry signal. We're going to be looking for a sharp bounce off this level. We don't want price to get too comfortable with this level, and we definitely, if price is going to float around this level, we want it to respect this level and not break out it with volatility. We would like to see price being held more or less to this area, and then getting a bounce in which we would trade the first bounce where price has given us a sharp bounce and a display that it is moving back in the direction of the main trend. And then we would zoom back out to our hourly chart and allow our trade to move forward. But at any rate, we'd set all of our stops off of the trigger chart, and then we would allow the targets to be hit as we watch our hourly charts. But at any rate, let me break this down on a real chart. So I'm going to go ahead and fire up my broker, and then I will break that down for you in just a moment. Now, the key thing to remember with I have to plug my computer in. Now, the key thing to remember as we're talking about the trigger chart and the entry signals is that we're always going to be keeping our hourly base, like our hourly time frame. That's going to be how we are viewing the markets and mapping out our support and resistance levels. Now, on a smaller time frame, such as the 15-minute, as I display here, we're going to be seeing this happen over what seems to look like more stagnant levels. But in reality, these are 15-minute bars, and they consolidate and end up only amounting to several hours of price action at certain levels. Now, since we're on a 15-minute chart, I'll just display, because we have price came down here, created a support level, and then rallied up and found some form of resistance. Then as it acted off this resistance and bounced away from this resistance, price came back down here to retest this previous support level, being held more or less. We have a slight little blip above that level, but at any rate, price came back to close immediately above that level. Looks like there might have been a gap there or something, but at any rate, price came back above that level, continued to just float around for quite some time, smaller type of price action within this area, but ultimately price did not come back up to retest this higher level. Instead, momentum starts to kick in as we get this little last moment. As we get this little last moment right here, we see that price is now breaking through this previous level support with a ton of momentum. We get a breakout here to this point, in which now price is going and going and going and continuing to drop until we get this final little what seems to be a bounce zone that price is making, and there's a support here. Now we have this previous support that could now act as a resistance, and if we do get this as a resistance, then we would look to try to find an entry based upon price continuing to bounce back in the direction of the main trend, as we see price broke through here with momentum and has now made a support level down here. So price is now trending back up. If we do get a pullback more or less to this level, then we're going to be looking to take this trade. But if we don't, and we're not going to be taking trades based on these shallow pullbacks, because this has not pulled up to here and there's no other support or previous resistance areas for price to interact with at this moment, and this one does not count. At any rate, you would mark this level as a support level, but it wouldn't be it wouldn't be a level that you're going to trade on, because this is the 15-minute, and even on the hourly chart, this is going to be fairly irrelevant. This is going to be like a small price movement on the hourly. But anyways, we're going to allow the price to continue moving, and we're just going to track it up. So at this moment, price is now making higher lows and higher swing highs, and it seems that it's all still within this range where we haven't gotten any significant moves either back towards the downside or through the upside. Now that we have this key support level down here, if we see a reaction based on a break of that level, we could look to take a trade in the direction of the main trend, considering this would be the pullback, this would be the price pattern. But otherwise, we look to get a reaction off this main key level in which price had broke initially through this. And I believe we can give price some more time, and it does essentially touch this level. Not only once, but twice. At this point, price has officially touched this level, but we didn't quite get into that level. So right now we're looking to get our entry, and we want to get the best entry as possible. So we're going to just wait a minute or so, 15 minutes here, 15 minutes there, and then we finally get price to retouch again. Now, the thing about this is that this is still technically a shallow pullback, and now we got this one momentum here where price did in fact want to react to this level at this price specifically, then this momentum would have been followed by even more greater momentum to the downside at this time. So I don't think price has found its true, peak point at this moment. This price is still displaying the fact that it's being able to hold and continue to maintain and make higher swing lows. So give it a little bit more. Price ends up breaking down, but it doesn't exceed any of the swing lows, and in fact might even have created a higher swing high in conjunction with this as it tried to retest to break this level, but more or less it just was held, and price continued to bounce on the subsequent candle. So price is now just floating around this area, and now we get our first real breakout where price broke into this area and came out and blipped lower, and it ended up making a new swing, and it looks like price is now, there's a lot of momentum, so we want to see price cover this this massive candle right here by at least a third or a half, and instead we get the price to break up and then breaks back down below, touching the top of this level almost to the pip, and in which we can now take an entry because we have now created this new high. We broke out of this recent structure right here, and now we're tying into here. Price broke through and came back below, so now we can be able to take our entry, and we would be able to set. All right, so we have to the high point, that's about 50 pips, and then we can look and set a stop loss just 2 or 3 pips above where that was. So we can set it at 70 pips, 75 pips at most, maybe 80 pips if you were feeling conservative and you really wanted to give the price an additional space. But at any rate, we'd be looking to take this trade with a 70 pip stop loss from here all the way back down to this level and potentially to new low levels. And that's looking like you'd be risking 70 pips to make 33, 34 pips. And with the potential to continue to exceed that first profit target, that would just be your first profit target. After that, I would be looking at additional profit targets, which we're going to be going over in the next video. But I just want to get through this chart and then just show you how it all really works out. Significant momentum down. If we had entered there, our price would have been completely respected at this point, and we have still some space at the top. And if price did want to come back, but with this momentum, that's heavy momentum, bigger momentum. This bar is bigger than any other bar that we've seen in the recent price history. So I would definitely feel comfortable taking this trade and allowing my stop to be comfortably sat right there. This is off the 15-minute chart. Off the hourly chart, we still haven't had any significant shifts. We're pretty much still creating this little level above here, retesting it, and price has not broken above it. Just a little bit of blips. Again, price comes back up to retest this level a little bit higher, not quite to our stop loss. That's why we always give a little bit of extra space, 2 or 3 pips above the market structure high at the moment, or whatever swing low at the moment, depending on what direction the price is going to be in. And then we are going to go ahead and move forward a bit more. Okay, now price is making lower swing highs, lower swing lows. It's starting to create a new form of structure. And then now we see price is broken back below. Tested one more time that ultimate swing high area. You know, the market isn't perfect. These little small blips above are literally insignificant. These are less than 2 pips. This is hardly a spread. Essentially, we wouldn't pay attention to these small little blips. It's just, you know, just in order to make our give our trade some space, we would always place our initial stop loss several pips above the structure high. So in this case, this would be our structure high, this swing low that was previously a support level. We would look to use it as a resistance zone because it's in various different spaces, but it is still just one zone ultimately. And this is what we got here. This would have been the shallowest part of the zone where price didn't quite go up and it didn't really have the momentum backing to really close into the area. It kind of bounced in and bounced out extremely briefly, which was still a good indicator that this was a hot zone and we want to pay attention, but it just quite wasn't ready yet. And then we see price comes back in, retest this level, and bounces away. It gives us a key indication that there is a lot of momentum backing this trade right here, backing this level right here, and it seems like the sellers are ready to come back in this market. And that's when we would take our additional entry off of this level or off of this level, depending on how aggressive or conservative you want to be. You have the first pullback, which is what I'm teaching, but some people may feel more conservative and look for this. They see a little bit more of a double top structure happening, and then they might feel comfortable with that. Some people are really conservative, but if you were this conservative, then your entry would uh, unfortunately be a little bit wider and your risk management would be a little bit less profitable. But at any rate, your bottom line would still be net profit. So you would just have to accept that and just assess your own risk tolerance. How risky or how conservative, I don't even want to say risky, but how aggressive are you towards risk and how conservative are you towards risk? And that'll be pretty much a reflection of how and which entry you'd be looking to take. But at any rate, this is the 15-minute chart. and you have to be nimble because the price doesn't stay in this level for very long. Even on the hourly time frame, this is only 2, 3, 4 hours at most you would have had, and if you were preoccupied, you might have missed this trade. But as you could tell, 1, 2, 3, 4, 5 hours later, price had broke out and significant momentum. Price is headed easily back towards this level, and we'll just continue to move the chart. And as you see, first profit target would have been hit, and then there is several other subsequent profit targets in which you could have aimed for at that moment. But we're going to go into that in the next video. I might have one more example of these chart examples, so just give me 1 second here. I'll see if I can pull that one up. Okay, so yeah, we have another example right here. I'm going to go through this one fairly quick. This is from the current day, it's price action, to about 6 days ago's price action. You know, we keep a track of the last 6 days of price action considering the market. The intraday market especially has a relatively short memory span, so it's easier to keep your trades within the last 6 days, especially since we're going to be aiming to get in and out of our trades within the same day/session. And that is going to help immensely when it comes down to setting your profit targets and your stop loss zones, so that you know within the day the direction in which the market is going, especially the days where we're going to be taking trades based on the key levels, and we should be seeing momentum backing these trades, which should be able to push our trades further towards our bias and towards the direction of our profit targets. But at any rate, let's go through this chart here. We have a down day right here where price comes into a temporary consolidation. It looks like it made a bottom here, several top outs here around the same area before price broke through and created a slightly higher high, and then failed to create that same low. It fell just a bit short of the structure low here, and that's about 8 pips. I would normally say within 2 to 3 pips you can keep that, but in either direction, this one fell short 8 pips, and that's just not going to pass. I would have to create a new level for that one and continue to just trail market to see where we're going to find further levels of support and resistance. Excuse me. Here we found price found some resistance here before bouncing back to this new level that we have here, almost to the pip, and then what do you know? Price booms up again, comes back down temporarily, slices into this lower support area before bouncing on and going to rally towards the previous swing high resistance level, in which price bounces from there. And now we see a pattern happening here. This seems like a consolidation zone. So it's happening over 1, 2, 3, 4, 5, so far 5 days, in which we had several down days of a prior trend engaged, which was this down move, and then price fell into this area and was trapped pretty much between the bracket of a support low and a swing high resistance. And now price is now currently on its third tap of this resistance, in which if we're going to get a reversal, then we're going to be able to see the market blast through this level with some momentum before coming back down to pull back into this level, giving us our entry, and then going for further highs, which could be this temporary area here, and ultimately the structure high, which is about 70 or 80 pips to the upside. Now, given the price respects this level and bounces down to this level, we'd be looking for a breakout of this level, a pullback to this level, and a continuation down from this level for to make lower lows and structure lows. Now this is a consolidation zone right here, very stretched out. This pair is experiencing some fairly large, about 30 pip, 35 pip swings in both directions, where the market has just been trapped within this area for quite some time now. It's definitely awaiting a breakout, and just using this method of marking your support and resistance levels horizontally on your chart and being able to await the reactions of these levels and wait for the market flow to tell you which direction it's going to go in, zooming down into your 15-minute time frame to take your entries, and then being able to manage your trade, awaiting your profit targets to be hit. Now that's going to be pretty much it for this segment of the video. It's gone a little bit longer than I expected it to go, but I did want to make sure to get the point across that we are going to be looking for these patterns, and you like the patterns that we've seen on the previous video, they actually exist and they actually end up developing on charts in live time. This chart is actually still live, as you can see, so we're watching this pattern form right before our eyes, but we are going to see how this pans out, and we're not in any trade at this moment. This was more or less just to get you introduced to the concept of using the hourly and the 15-minute chart together to ultimately find your best entries possible. That's it for this video. In the next video, I'm going to be talking about price profit targets, and I'll see you in there.